Good morning and welcome back to the Ed Morrissey Show podcast. Today's Monday, July 25th. And here are a few of the top stories that we're covering at hotair.com today. If you haven't already been there, we're going to have a full slate of stories for you today, so be sure to check it all out. I started off today talking a little bit about the White House trying to redefine what recession is going to be. Next week's second quarter GDP numbers will be coming out. The advance report, the first report from Commerce on the nation's economy in the second quarter. And it's widely expected that this is not going to be a good report. The first quarter was negative growth, minus 1.6% annualized GDP. And the popular definition of a recession is 2 quarters in a row of negative growth. Now, there's some issues with that. The popular definition isn't actually the official definition. In the National Bureau of Economic Research usually is the board that determines when a recession starts, when it ends. That's been true for a number of years. I mean, this has been true for quite a while. But the popular definition still holds some sway with the electorate. And this is what the problem that the White House is going to have. They're going to have a big problem with this because we're already starting to see people have the perception that we're already in a recession, and a negative number in Wednesday's report is definitely going to leave the impression that that is very much the case. And it might very well be, based on how consumer spending is going, based on what happens in the jobs market. There's already indications that the jobs market is starting to falter. There was a big Washington Post piece on that last week, in fact, that the jobs market was starting to flash amber, if not red, as I put it on Friday. So these are the things that are going to be coming up. And what the White House is trying to do is they're trying to get ahead of this, right? To say, well, look, you can't just assume it's a recession if this number comes back negative. Well, that tells us a couple things. One, they expect this number to come back negative. They wouldn't be out front shaping the PR battleground if they weren't convinced that there was a need to do this. If they thought that this number was going to come back positive, they would probably not even be talking about how to define a recession, because that automatically sets up the expectation. Now, you could argue that they're playing like sort of a double back strategy, that they're setting low expectations so that when a good number comes in, they can celebrate. It's possible, but my guess is that based on some of the consumer spending numbers that we saw, the unadjusted for inflation numbers, where consumer spending was either stagnant, which it was in May, or 1% growth in June when inflation was running at 1.3%. My guess is that the inflation adjusted numbers that we're going to see on Wednesday will be negative in terms of consumer spending, at least slightly negative. And that may also be true in the July jobs report, which will be coming out about a week after that, about a week and a half after that. So it's very possible that the NBER is going to declare a recession anyway. It's also possible that they won't. We have to see what the numbers say. But just the fact that the White House is pushing this tells us that there's a really good potential for this being a negative number on Wednesday. Now, they can push back all they want on this. The problem is that they completely fried their credibility by denying inflation existed for months and then trying to shift the blame for it to everybody except the Biden administration and its energy and supply chain policies. So they're running the same risk here of running what I call the Chip Diller all is well strategy last year on inflation, when all was clearly not well. It's still not well. You got inflation at 9.1%. It's running the hottest it's been in the CPI. So if they're going to come out after Wednesday and say all is well, who's going to believe them at this point? I mean, there's literally no credibility left on this. So that was my VIP post for this morning, is going over those issues and seeing what the White House options are, which are bad. I mean, you've got Q3 numbers that come out right before the midterms, right? I mean, I know there's going to be some early voting, but it's the Q3 numbers are going to come out just about 2 weeks before people go to the polls on election day in the midterms. And based on what the Federal Reserve is going to be doing to try to tamp down demand, based on what we're already seeing from consumer reaction to high inflation in terms of spending money, it's looking like, even if you don't want to, even if the NBER says, well, despite two successive quarters of contraction, we don't think this is a recession. By the time you get down to By the time you get down to the midterms, there's really going to be no denying this unless something radically changes, right? A huge amount of supply of oil and gasoline show up in the marketplace. Prices drop incredibly fast back down to, early 2021 price levels. Unless you see something like that happening, we're on a trajectory here, and that trajectory is almost certainly taking us into recession. So a few other things that are coming up, by the way, and that I've already written about. We're seeing some numbers on term limits for Supreme Court justices. I've got that post up there. The Democrats' midterm pitch now is going to be the CHIPS bill that's going through House and Senate. That's a problem because what the CHIPS bill does is it puts a whole bunch of cash into the pockets of high-tech corporations that are already paying incredibly low tax rates. I mean, they pay much lower tax rates than, say, oil companies do. They make tons of money. What we're trying to do, it's not that this is bad policy either. We're trying to get them to relocate their supply chains out of places like China so that we can have a more stable supply chain. But this is something that they should have been doing from the start of last year when the supply chain crises were already evident, especially in the chips market. Instead, they prioritized a whole bunch of other stuff ahead of it. They failed on all of it. And now their big midterm pitch is going to be they stuck cash into the hands of big corporations. I am really interested to see how progressives react to that midterm pitch. That should be a lot of fun. I have a post about Kamala Harris declaring pregnancy is a crisis. Now, it's like not quite what she did, but that's what it sounds like. And it's and also her supposed use of a Venn diagram to find out the real conspiracy against reproductive rights. Just all sorts of nonsense. There's other great stuff coming up too. All the pundits got a post analyzing Newt Gingrich's claim that the Republicans are going to win 70 seats in the midterms, which would put them at somewhere around 290 seats in the House, which is, that's not going to happen. I'm not sure. I'm sure, Newt's a smart guy, but he's also a real, rose-colored glasses guy when it comes to this stuff. And I don't think that Republicans can get to 290. I don't think Democrats can get to 290 these days. I think 260 would be a huge win. 40 seats would be a huge win for Republicans. And that's about as high as I would guess Republicans are going to get. And don't forget, they won 68 seats in 2010, but they were starting off at 188. So they got to about 250 or so. And that was pretty much a functional high. They started losing seats in districts where Democrats were a little bit stronger almost immediately after that, and they came down a little bit. So, I think if you're talking 290 seats, you're really overthinking this. However, I will say this, and I haven't had a chance to address this in post, so I'll just say this, and we'll close with this. I don't think people understand the political environment of high inflation, low growth, increasing interest rates, and a president who is so unpopular. We haven't seen that in over 40 years. And I don't think people understand the political environment that creates. So, there's talk about, there's going to be a rebound effect due to Dobbs. There's going to be this issue or that issue. Republicans are going to choose bad candidates in a couple of places they have. All of that that's analysis that takes place in a 2010 environment, where you've recovered, or a 2014 or 2018 environment. Those are good arguments in that. This is not that environment. This is a much different political environment where the economy is just simply, at least in terms of voter perception, melting down around Americans. And that has a tendency to really focus people solely on the economic issues. And so I think people are really missing that aspect of this electoral environment. It's something to keep an eye on as we go forward. Stay tuned for more from the Ed Morrissey Show, where we've got Edward Niedermeyer coming on to talk about Elon Musk and the myths of Elon Musk's empire and the realities of Elon Musk's empire. It's a really great conversation, and you're going to want to walk through that, especially after watching how the Twitter deal fell apart. Maybe you can get a sense of where Elon Musk goes next and where Tesla goes next. Coming up now on The Ed Morrissey Show. Welcome back to the Ed Morrissey Show podcast, and I am very excited to introduce you to E.W. Niedermeyer, who I have been wanting to talk to for quite some time about the Elon Musk and Tesla phenomenon. He wrote the book on it, literally, Ludicrous, the Unvarnished Story of Tesla Motors, and E.W. Niedermeyer has a lot of experience in the auto industry and has got some quite some insights in here. And what we're going to do here is we're going to deconstruct, at least we're going to try to deconstruct some of the more common myths around Elon Musk. And these came up. And do you like EW or Ed, or what? How do you like to be called, actually?
Ed is great. We can just talk Ed to Ed here.
Two Eds are better than one. I always say that. So Ed, I mean, you've been pretty active on Twitter, very politely trying to deflate some of the, I would call it irrational exuberance, to pull a phrase out of the economics department around Elon Musk, and especially about his attempted acquisition of Twitter. First off, I guess you got to feel pretty good about being proven mostly right on how this Twitter deal fell apart. But I mean, a lot of this mythology, I think, has been around for quite some time, well before the Twitter acquisition.
Yeah. So, one of the things, so Ludicrous, I knew when I wrote the book that the story wasn't over. So I was really trying to go into the history and really trying to understand, like, what are the patterns that motivate this company, motivate this guy. And one of the things that I found, I think one of the most pivotal moments in the history of the company in terms of really revealing, because there's all this talk about, does Elon really care about money? Does he not? Like, there's all this, sort of what are his real motivations, right? He's always talking about these big missions and all this stuff. And one of the moments that really just jumped out at me in the history was in 2006 when Tesla came out of stealth mode. Martin Eberhart, who was the guy who originally incorporated the company and then came very early together with Musk. He was the CEO. He was the focal point in all the coverage. He had a BlackBerry ad that kind of presented him as the Steve Jobs character, really, which sort of, a lot of the branding that now we associate with Elon Musk. And Elon was really unhappy with the initial round of coverage and sent these emails, which leaked, complaining about it. And it really just revealed. And then he wrote his top secret master plan. And that was the start of him really being this important part of Tesla's brand, being the focal point and this visionary, leader. And so I think that's really, been one of the big motivations to him. And I think that, like, if you look at a lot of things that have come since then, decisions that don't always make sense as like pure business moves, right? Which I think the Twitter deal doesn't make a lot of sense as a pure business move. I think when you start to think of it in that terms, in terms of his need to have this sort of image and this adulation, like, that's a common thread. I think that unites a lot of this story and makes sense of a lot of it.
Well, sure. I mean, and obviously the guy is a very successful entrepreneur. You got SpaceX. He was involved in PayPal. He's been involved in a lot of different things. SpaceX, I'm here in Central Texas, not terribly far away from the SpaceX facility there. And so, I mean, this guy he's got Tesla, which actually delivers vehicles. And I've read the introduction to Ludicrous, although I haven't been able to read the rest of the book. And again, that is Ludicrous, the Unvarnished Story of Tesla Motors. And you can find that on benbellabooks.com. Or you can just go to Amazon. You can find it there too. But benbellabooks.com is the primary.
Direct from the publisher.
Yeah, that's the publisher there. So you're getting it direct from the publisher there.
That's right.
And there was questions whether or not that was even going to happen in the beginning, as there usually is for these types of startups, right? It's not. I mean, Tesla wasn't the first startup that had questionable delivery promises being made.
Yeah. So I think there's a lot has changed, right, over the years. When I got into this story without really meaning to back in 2015, and if you were paying attention to Tesla back then, the whole context and conversation, everything around it, and Musk himself, very different now than it was then. But I think there's a something that you mentioned about him as an entrepreneur and as a successful entrepreneur. Yeah, clearly, like, he's tried some very hard things. He's had a lot more success than a lot of people, including myself, thought. And as a skeptic, I think it's really important to give people credit where it's due. And I really try and do that with Tesla, which is what I focus on as much as possible without getting distracted into all the other things that he does. But I think there is something really interesting about Musk that separates him from the rest of the sort of major entrepreneurs of our time period, which is that unlike, the two big examples would be Zuckerberg and Bezos, like these are also two of the other, richest men or some of the richest men in the world. They built businesses that are just these cash machines, right? And this is the thing that this is how Silicon Valley became Silicon Valley, was that these technologies, particularly software, these are things that once you build good software, it scales endlessly. And so the profits, just once you pay off your costs, the margins are huge. Elon Musk has never started a high margin business. He's never created a business that just absolutely, Tesla does sort of make some profit now. It has for the last few years under perfect conditions in terms of its product pipeline and the macro situation. But it's not a cash machine. SpaceX is not a cash machine. We know less about it, but none of his businesses are. And so like Musk is sort of unique in the sense that his wealth, much more so than Bezos or Zuckerberg, it does depend on popularity and image and perception. And I think that's where he's been most successful as an entrepreneur.
And you and I have had some exchanges on Twitter about this. And I agree with you that a lot of people are sort of starry-eyed when it comes to Elon Musk. And I think part of that is just the fact that they really dislike the way Twitter is being run, and they were just really looking for some sort of white knight, and Elon Musk fit the bill. But what you're describing is actually reminiscent of something else that happened in the car industry. I was just watching, and I know that you're going to know what I'm talking about here. I was just watching a documentary on John DeLorean, right? Mm-hmm. And I've seen the movie Driven too, which is actually pretty entertaining, although maybe not terribly accurate in some of the details. It's still terribly entertaining, but it also sort of captured the idea that John DeLorean really was trying to sell himself. And that it didn't start off as a con. It sort of ended up being a con. And DeLorean paid a big price for that in trying to escape the natural consequences of a con falling apart. And I think a lot of people don't remember that about John DeLorean either. I think they remember the image, right? He was the guy who was going to take it to the big three in Detroit and all of this. But DeLorean was pretty dark. and I think we have this tendency, maybe especially in the car industry, but just in terms of maybe now it's big tech as well, to really sort of want to see white knights emerge, like a John DeLorean, like an Elon Musk.
Yeah, I think you're absolutely right. And I think that, that's the opportunity that Musk has really capitalized on, is that, obviously we have lots of different billionaires out there, but they all do stuff. And again, they do stuff where, Bezos and Zuckerberg, like, they don't have to be popular because they have this cash machine. They can be the least popular people in the country, and the economics of what they do are just undeniable. Right. So Musk took this other route where he has not pursued building that machine that, like, no matter what happens to him personally, he'll always have that cash printer. So he'll always be who he is today. He took a much riskier. And so the rewards have been better, right? With less actual economic value created in a real lasting, meaningful sense. He's increased his personal wealth to a whole other level. But I think part of what I'm trying to get across with all this is that it's fragile as well, in a way that Zuckerberg and Bezos aren't, because it really does depend on this public perception. And a lot of what I try and do in the book, the first thing when I first stumbled onto this story, the first thing that hit me about it was, wow, there's this massive disconnect between the public perception and the public narrative about this company and the reality that I'm seeing now that I'm just sort of confronted with what's happening on the ground. And for 5 years, I dug deeper and deeper into this company, and that was the consistent theme. And I think that gap, to me, is the risk here. It's because the perception is what's driving the valuations and therefore the wealth and everything else. But when there's a gap between that perception and the reality, then all of that wealth and the capital and everything that's being built on top of it, it's being built on sand to some extent. And I think that unlike Zuckerberg and Bezos and a number of other very wealthy people and the organizations and the movements and everything else that they built around themselves and with their wealth and everything, I think everything that ties back to Elon, it really is the vagaries of the popularity of one man. And that's a very unstable thing compared to the rest of our economy. And when you build huge economic edifices on unstable things, over time, the risks just, they don't go away.
And I think, when you've been talking about this on Twitter, this is really the problem in relation to the Twitter deal, right? I think there's a lot of people on Twitter who not are just mythologizing Musk into the White Knight, but also into the into the Black Knight, maybe even the Black Knight from Monty Python and the Holy Grail, right? I mean, to a certain extent, where he's either the Prince of Light or the Prince of Darkness when it comes to this. And I think you've always been careful to sort of be realistic about this and say, look, I mean, Tesla's solid, to a certain extent it's solid. It's certainly producing cars and it's a real company, but it's that gap that you just described that really matters in the Twitter deal, because he doesn't have a cash machine to fuel this. He's going to have to leverage Tesla to do it, which turned out to be true. And if Tesla takes a hit, this deal is not going to go forward. And that turned out to be true. And really, honestly, I think it was maybe part of it, what we all missed, which in analyzing this, which is that the Twitter move was an extremely risky move for very questionable benefit. And that's kind of a pattern with Musk here too.
It is. And I think, the thing that it's been wild watching it is that, so when he does stumble, I feel like everybody else is like, wait a second, this is Elon Musk. How can he? And I think the example of this for me that stood out the most was when the Cybertruck was launched. And I was there actually right across from where they were launching it. And I was with like watching the reveal with like 100 or 200 like employees, people who work for Elon, like true believer, engineer guys. And like the reaction when the truck came out, when the windows were smashed, like all these like missteps that were really like jarring compared to every other of these shows that Tesla's put on, people were just like shocked. And for me, I saw it the exact opposite way. What I saw was I'm shocked when he doesn't stumble. He's been walking on a tightrope for 5 years, and people, when he stumbled, and he's taken risks that when you really look at them, when you really dig into what he's done to keep this company afloat, and again, this is what's in the book, the risks that he's taken have just been absurd, and yet they've managed to work out so far, almost, like shockingly well. Like he's beaten the odds so consistently, but none of that changes the fact that he's still walking a tightrope and juggling chainsaws. And like every 6 months or so, he throws another chainsaw and a bigger chainsaw, and a flaming chainsaw on top of what he's already juggling. And he just piles up more and more and more risk. And it's like, to me, it's like, yes, I've been wrong about how long he's been able to manage that risk. It's been amazing, right? But like for him, his feedback loop is, I take on risk, I get an advantage, it works out almost always, and so I'm just going to do more and more and more. And so he's following that feedback loop and piling on more and more risk, and it just gets more and more absurd. And it's like, just because he's made it this far against all the odds doesn't mean that just keeps going on forever. Survivorship bias is a real thing, right?
Right. Well, and so is adrenaline addiction, right? And so is risk addiction. I mean, some people just don't know when to stop. That being said, he has accomplished amazing things, especially at SpaceX. Now that long term is probably going to pay off. If he can continue doing that, he will have, a space vehicle that will be reusable and will generate tons of income, already starting to, right? I mean, so that's a long-term risk in a business that you're still really seeing government demand more than you're seeing private sector demand, but that may change. Tesla's, and the other thing about SpaceX is that there aren't a whole lot of, there's not a big competition in there. You have Bezos with Blue Origin, and Boeing is doing something, but it's under NASA's control. And I grew up in the space program. My father worked in the space program for 30 years. So I'm a little familiar with that, but NASA is a place where ideas go to not die, but maybe go into, into suspended animation.
Take a long vacation.
Yeah, they take a very long nap over at NASA. Whereas, Bezos and Musk are putting those things into, and for that matter, Virgin is a competitor in that thing. But Tesla, there's all sorts of competition. Even in the EV market, there's all sorts of competition from people who got there a lot earlier and who had a much better financial infrastructure to back those types of things. And that, I think, is part of the reason why some of the other things that happen at Tesla happen the way they do. And you cover some of that in the book about the message control and about some of the employee-employer relationship issues that have popped up over at Tesla over the years.
Yeah. Yeah. So I, I had to decide really early on that I wanted to focus on Tesla and not on Musk and everything that he does.
Right.
And frankly, just as a part of that decision, there's a lot of aspects to it. One was like, I wanted it to be a book I could actually write, and I wanted to stick with my background as in reporting on the auto industry, and that's what I know and all that. But also like, I mean, yeah, I think, what you say about SpaceX, like of all the things that Musk does, SpaceX, I have the least issues with. I think it's a private company. We don't really know what the unit economics of it are. We don't know how financially sustainable are. They're continuing to raise money, which suggests they aren't profitable, right? But we don't know enough about that. But I agree. I think that of all the things he does, that I don't waste time thinking about what he might be doing wrong there or whatever. Like for me, SpaceX is fine, but Tesla and the car business is a very, very difficult one. And again, like you have to give him credit. It's one of the hardest businesses to enter in. It's one of the hardest businesses to be in, period, to run a company in. It's one of the hardest businesses imaginable to start a new company in. And like, he has gotten farther in that process of starting and establishing a new automaker than anyone in 100 years. And like, you have to give credit to that. And again, my pitch to people reading the book is not necessarily like this book exposes that everything is a fraud. Everything at Tesla is not a fraud. They make cars that people like and everything, but like, you kind of need to understand like what are the challenges that the company's really been in, because you don't see that covered. You really just get the narrative, right? How have they gotten through those challenges? What are the tactics and everything that has allowed them to survive, right? People like to tell themselves they make a car, people like that car, therefore the company is successful. Well, that's a great sort of, broad heuristic for thinking about a company, but you have to look at the actual details of what's actually happened. And like that alone is not enough. Making a product people like is not enough. There are a lot of things that you have to do. And frankly, some of the things that Tesla's done over the years have been very shady. And I think that's also, talking before about just sort of this feedback loop that Musk is in. One of them is that he can do whatever he wants to, and he will get away with it. And he's gotten away with a lot of things that people don't understand in terms of auto safety like evading various regulations. I mean, the safety issues around autopilot, full self-driving is a complete scam. Like there's a lot of stuff. And again, this stuff is getting worse and worse as time goes on. And it's because he gets away with it, and he's been sort of insulated by this cult that he's built around himself as well. And again, I think to me, why this story matters is because I think, and again, I may be proven wrong ultimately about this. Like, I have to be honest, I don't know what the future holds, but like gravity is gravity. And I think the big lesson of this entire story is things can work out amazingly well in the short term. It can look like you're doing the impossible, and you can, but really these are long-term things. And if you haven't built something that's long-term sustainable, how much does all that short-term success really mean? And unfortunately, I say unfortunately, I grew up on the West Coast. I would love there to be a West Coast automaker that leads the world in technology. I mean, and I'm proud that Tesla is on the West Coast, but like, it's not a sustainable company. Even now when it's making money, it's just not sustainable. And so if we want to continue to feel proud about this company and have it be sort of this thing that symbolizes America's ability to come back after, a century, start new car companies and reinvent things. And like, it needs to be a sustainable thing. And as long as it's built on not just one person but like one very unstable and like, a guy whose behaviors is in really unsustainable patterns, like we shouldn't want that, right? We should want the kind of asset that Tesla is to this country to be on a more stable footing than that. But extricating Musk from Tesla without breaking one or both is also not something that will be easy or smooth,
or maybe even sustainable. I mean,
possible. Yeah.
We mentioned John DeLorean. In terms of cars, I would say in terms of tech, you're talking a Steve Jobs situation where Steve Jobs was basically separated from Apple. Apple turned, it was a disaster for Apple. The management team that took Apple away from Steve Jobs, as much problems as Steve Jobs created in Apple, he turned out to be the driving force, both, in terms of vision and really in terms of creativity and forward motion. And Apple couldn't live without him. And they reconfigured back around Steve Jobs when they finally realize that. And you may run into that sort of situation with Elon Musk, because you are getting cars. I gotta tell you, in between the time that you and I have been negotiating this, my neighbor across the street bought a brand new Tesla, and they love it. Absolutely love it. And so the cars are being produced, as you say. They're apparently turning a profit. But again, that can change very fast. Yeah. Betamax turned a profit too for a while.
And nothing, I mean, no business, or very few businesses, go from huge profits to huge losses as fast as the car business, right? And that's because, and again, you know, early on in a car maker's history, you know, you start with small factories, small workforces, small everything, right? And so your fixed costs, you know, which is what it's the anchor that drags you down when you run into hard times economically. It's not that big, right? And so as you expand, then your fixed costs get big, and like again in the car business, it gets bigger than almost any other business, because you're talking about giant factories and supply chains around the world and R&D and all these things. And it's as companies get bigger that when then, you know, maybe the Cybertruck comes out and it's kind of a dud and it doesn't resonate with truck buyers. I think that's a very real risk. You know, then all of a sudden, you know, you've got 2-3 more factories, which Musk has already said are burning a lot of cash. That's what factories do, unless they're selling almost every car that they make like that. And so, you know, what's kept Tesla viable for this long is the brand. It's the appeal of the brand. And Musk, the genius of it, see, and people tell themselves all kinds of stories about why this success is happening. For me, it's simple. It's Tesla saw that a lot of people were making money in high tech, and that when there's a group of people that make money and share an identity, they want to buy things that reflect that identity. And in this country, especially, a car is really how you reflect your identity, how you make your money, where you come from, what you believe in. And there wasn't a car that was made for techies and the new tech wealth elite, right? And that's what Tesla did. That was the economic and opportunity. The traditional car business completely blew it by not seeing that opportunity. It was a massive, massive error, but that's it. That's the opportunity that they saw. But as you say, now everyone gets that that's a real opportunity. They understand the kinds of things that you need to do to appeal to that market. You know, so far the cars have been sort of, you know, fairly broadly appealing, right? So you're talking about the Model S, like a big sedan, and then like a smaller sedan, and a little crossover version of that and stuff like that. Model X, a little flashy. When you get to things like the Cybertruck, when you get to things like, you know, like the semi truck, the Roadster, these things, this is where you know, you start to wonder, like, are these all going to be hits? And if they're not, as this footprint expands, like you can go from making good money in the car business to just burning cash, you know, so fast that you go bankrupt in weeks. I'm talking big companies, right? This is what happened in 2008. And that was the first story I ever covered. And everyone always forgets how quickly the car business could go from printing cash to gone, just zero.
Yep. And I mean, Chrysler all but blinkered out in 2008, 2009. I mean, I think they're still around, but they're owned. It's a foreign, at least for a while. I'm not sure if it's still the case. They're a foreign-owned company and more or less just a brand, not really the Chrysler that we knew prior to the financial collapse.
They were merged with Fiat, and then that company then merged with Peugeot. Peugeot Citroën. So now it's like a French, Italian, American. And this is what's happening in the car business, right? It consolidates. Smaller companies become bigger companies. And that's why it's so amazing that a company has been able to start, because you don't have the scale when you're starting. But even today, even in making 1 million cars a year, it's a huge accomplishment, right? And again, like you have to be able to hold, and we're bad at nuance in this day and age on all kinds of topics, as I'm sure you know, right? Like it's not just Elon Musk, it's a lot of things. And frankly, I think a lot of successful people exploit that. I think Elon does. I think he forces people to either love him or hate him. And I think that's part of how he's built this image. But like, you have to, in order to understand the story, you have to be able to hold two thoughts in your mind that, like, one, yes, it's an amazing, unprecedented accomplishment to go from 0 to 1 million units. It shouldn't be possible. And if you look at the history, it took a lot of chicanery to be possible, right? On the other hand, just because you've made that incredible accomplishment doesn't mean that it's not built on sand and that it can't go away in an instant, and that risk is not really real. And I think especially, like, as a society, we have to come to terms a little bit with particularly the self-driving and driver assistance technology stuff. There's a lot of issues around that.
Yep.
And I think that Tesla has made some really, really poor choices in that realm that create some massive risks also for the company that people just do not understand at all.
And then just to wrap this up, right? The attempted acquisition of Twitter is another massive risk, and in large part because it was leveraged off of Twitter value off of Tesla value. Excuse me, is leveraged off of Tesla's value, and that is risky enough in itself. But if that Twitter deal damages Elon Musk's finances, it really could end up undermining Tesla. And there's another aspect to that, of course, which was Tesla's investment in Bitcoin, which, along with everybody else's investment in cryptocurrency, is really diminished in value. And so you've got all these multiple risks here involving this Twitter deal, which really does kind of prompt the question as to whether or not this might not be an inflection point for Musk in terms of his ability to continue on with some of these, entrepreneurships.
Adventures.
Yes.
No, and I think that for me, and there's a lot going on with the Twitter acquisition. But he sort of got trapped. Like the big picture takeaway, right? Is he got kind of he did this. It was an impulsive thing. He got committed to buying this at this higher price. Its stock price has gone down. Tesla's stock price has gone down. He doesn't have cash. He has to leverage his Tesla stock to pay for all this stuff. There's a lot going on there, but you're right. It runs a lot of risks for, this sort of house of cards, right? Like Tesla's stock is sort of the foundation that this is all Musk Inc. is all built on. And if he has to leverage that stock further or sell it in order to follow through on this commitment, that could really shake the foundations of a not very stable structure. But I think the most important thing about this, and why I think it is an inflection point, is that, he made that decision because it wasn't smart. He didn't put a lot of thought into it. I don't think. I don't think he's dumb. His problem, and it's a very common problem for people who achieve a certain level of not just money, but also I think really fame is a lot of it. Is that it reaches a point where the person can no longer get feedback. No one else. He doesn't have people around him that can tell him, you know what, man, like, I see what you're going for here, but like, this isn't the way to do it. Let's take a beat. Let's find another way. Like he has enablers, but I don't think he has real friends. And if you look at the entire discourse around this company, I've been, had waves of it wash over me ever since I started reporting this. He has built a cult, and again, this is this short-term, long-term thing. Building that cult is a very, very successful short-term tactic. In business now we see, also maybe in politics, building a cult following can be a very, very successful tactic in the short run, right? Yep. But then you reach that point where the cult is so successful that no one can rein you in. You're out of control. You lose touch with reality. You're not getting healthy feedback loops, right? You're getting enabling. You're surrounded by enablers, and then you make mistakes. And then what? And I think that's what we're seeing here. I think it's something we see in a lot of American life, unfortunately, these days. And I think that we'll see how it all plays out. But I think that ultimately, when it does all play out, I think that's going to have to be one of the big lessons here is that, that temptation, especially in the online age, to build a cult and to let that accomplish something huge for you is always going to be there. But I think it's going to take some Icaruses flying too close to the sun on that. And I think we have a couple of examples of that. But if that's what happens to Musk, it will be the biggest. It will be the example that defines this phenomenon. And I really hope that will be a big enough thing for us to learn this lesson, because I think it's a really important one.
Well, Ed, you stole my my off ramp there. I was actually going to bring up Icarus and the ancient Greeks knew about hubris. But
yes,
you're ahead of me on this, man. I don't know.
So the subtitle for my book was actually going to be The Tragedy of Tesla Motors, and I meant that in the classical Greek mythology sense.
Yes,
because I think he's a tragic hero, right? And you have this tragic flaw, which is the character, the hubris, oftentimes to achieve the impossible, right, and to dare to even try. Then you have the ability to do it. These are the heroic aspects that we're familiar with, but the Greeks understood that those things that allow people to be heroic also tend to lead to the downfall of that person. And I think we're getting one of the oldest stories ever told here. It updated for our crazy times that we live in.
Well, Ed Niedermeyer has written the book on Tesla, Ludicrous: The Unvarnished Story of Tesla Motors, and you can find that again at Ben Bella Books. That's BELLA, BenBellaBooks.com. You can also get it at Amazon if you want to irritate Elon Musk and buy it from Jeff Bezos. You can go over there too. And then you also have I guess you have a podcast of your own, the Autonocast. Is that what it's called?
That's right. If you go to autonocast.com or search Autonocast on any podcast platform, we have about weekly conversations with leaders in the automated driving technology space, but also all kinds of future mobility technology stuff. So if you're interested in that kind of thing, check that out.
Excellent. That's autonocast.com, AUTONOCAST.com, autonocast.com. Right. So go check that out. Ed, it's been a real pleasure talking with you. Real pleasure interacting with you on Twitter as well. We got to throw a shout out to Montana Skeptic for making this happen. Montana
Absolutely.
Skeptic, you're the man.
Great guy. Yeah. Thanks, Montana. And thank you so much for having me. This is a really fun conversation. Great. I'm really glad we were able to make this happen. And absolutely. See you back on Twitter.
And see you back on Twitter, maybe back here from time to time too. Check in as things develop.
Anytime you like.
All right, Ed Niedermeyer, thank you so much for being with us. Stay tuned for more from the Ed Morrissey Show coming up next. Thank you for watching and listening to the Ed Morrissey Show podcast. Be sure to subscribe at Spotify, Apple Podcasts, and YouTube to get alerted as soon as new episodes get published. You can support the Ed Morrissey Show and Hot Air's VIP reporting by becoming a VIP member too. Visit hotairvip.com and use the promo code SAVEAMERICA, all one word, for 40% off your membership. Choose VIP Gold and gain membership to access to all of the Town Hall sites. Thanks again for watching and listening.